Thank you, Nicholas. And thank you everyone from the Reed corporate team for setting up today. I certainly believe this is one of the best events to connect companies to investors, so it's a pleasure to be here today. For those who I've met before, like Nick said, I'm Luke McFadden, the CEO and MD of Minerals 260, and it's a pleasure to present. About 2 years ago, I presented here, and we were a greenfield explorer. Stock price was about 10 cents, and our pitch was we were going to acquire a major asset. Well, earlier this year, we achieved that success, and that's what I'll be talking about today. Look, I really like this slide. If you only read one slide in the presentation that's online, like Nicholas said, read this one. It's a great summary of where the company is at today and how we think about our value proposition to you as the investor. All of us at Minerals 260 are aligned, whether it's the board or at executives or management, in our goal to become a significant gold producer in the next couple of years. We're going to do that through, first, the exploration, which Nicholas said we released a new resource update earlier this week about, then the development, and then the operation of the Bullabulling Gold Project. We are going to achieve that by continuing to attract and retain excellent people, because you need excellent people to develop an excellent company. We'll continue to seek ways to grow Bullabulling. We certainly don't think we've exhausted the extent of that resource yet. And then we will rapidly advance it towards a new operation. We've got some excellent foundations, but it's also worth reminding you we've only owned this asset for 7 months, and so we're only just getting started. 12 months ago, we were a $30 million company. 6 months ago, 200. A month ago, 600, and today, 850. So we are certainly on the trajectory as a growing company. It has no doubt been a transformational year, but again, we're only 6 months into this journey with our ownership of Bullabulling. And one of the most pleasing outcomes of the $220 million capital raise we did in April, which is an ASX record to raise 7 times your market cap for an acquisition, was the type of investor we attracted to the register. Here you see the top 5. Some of the best investors in the world and in Australia are on our register, including Tim Goyder, who is the chairman and the second largest shareholder. And thank you today to the people in the room who supported that cap raise, whether as an investor or, I can see you there, Chris, as one of our brokers. But it's not just the substantial shareholders that we've got that we're very proud of. We're certainly proud of our attractiveness to the retail market. For those who have followed Tim Goyder's companies for the last couple of decades, it's not an accident that Tim has now created what is probably going to be his $3 billion company in the next week or two. When you work with Tim and you work with his team, you certainly learn that whilst success in this industry is not a foregone conclusion, with the type of leadership that we've got, we certainly think we've got the recipe. And so why were people attracted to Minerals 260? Well, it was the asset, first and foremost, then the people, and then the strategy that we've got. One of the things that we want to be known for in the industry is doing what we say we're going to do, which is actually not that easy to do when you're the MD, with all the other pressures that you've got going on. Earlier this year, we said we would release exploration results every month, and we have. We said we'd release project updates, and we have. We said we'd attract excellent people to develop the capabilities to match our ambition to turn this into a mine, and we have. We also said in February that we would announce a new resource in December, and many people that we would doubt that in addition to the 110,000 metres that we've drilled this year. And on the 1st of December, that's what we did. And then longer term, that plan to bring Bullabulling back into production is on track. We continue to target the second half of 2028, and we look for ways to continue to do that sooner. We can achieve this with how we think about the project, but also the extensive information that we inherited when we acquired that project. But why develop it at all, you ask? Well, for us, it's all about value. Today, if you did your benchmarking, we're valued at about $200 an ounce in the ground that we have. If we achieve just the average multiple producer for the resource in the ground, we should be between 5 and 7 times our market cap by the time we get to an operation. So that's why we think about developing this asset. It's all about growing shareholder value. The faces you see here are an excellent team, and we work hard every single day. The people here support me in leading this company, and everyone is experienced success, whether it's at Liontown, Chalice, Oz Minerals or De Grey. Experience with success is important because it actually doesn't come across that often in this industry. So we've got people that know what success looks like, and we're looking to repeat that at Minerals 260. So to the project itself, it's all about location, location and location. It's as important in mining as it is in real estate in Melbourne. The project is 45-minute drive from Kalgoorlie Airport, so it offers all the benefits of being so close to the gold mining capital of Australia. The location west of Coolgardie also means that all our plans for further regional exploration are not constrained by larger players in the gold sector. We acquired 130 square kilometres in April this year, and today I sit on just under 600 square kilometres as we've rapidly advanced that tenure acquisitions. This additional tenure has been optioned, applied for or acquired, and we continue to grow. And as we continue to grow our understanding of the geology in the region, we're going to apply that to new targets in 2026. When we first saw the project through our due diligence work, we began to make a list of features that we really liked about the project, and that list has continued to grow all this year. There are several highly valuable features about Bullabulling. For example, a native title agreement, which is increasingly important in this sector. The simple metallurgy and the location, like I talked about. But the two most important things is the ounces, the scale and the commodity. At 4.5 million ounces, this is the largest gold asset in Australia not owned by a producer, and the second largest open pit currently in development. I don't know what the formal definition of a gold bull is, but if it's someone who thinks that the long-term trend of gold price is trending upwards with the typical volatility that we see every week, then that's me. And this is the project that gives you, as the investor, the exposure to that short-term and long-term gold exposure, because we certainly think that we've got the best development project in Australia. And unless you think governments are going to spend less than what they tax, they certainly won't in this state, inflation is permanently lower, and wars are going to stop, then gold's attractiveness as a hedge against anything is certainly not going to go away. The 4.5 million ounce resource shown on this slide has 3 million ounces of indicated classified ounces. It's more than many mines already in production today. The resource itself is 9 kilometres long, or just under 9 kilometres long, and if we extend it to that Gibraltar image, it's another 5 kilometres in addition to that. It takes you over an hour to drive from the top to the bottom of the resource for those that have been there. Those names come from smaller historically mined areas, but this is one continuous resource. This year, we had one of the largest drilling campaigns outside of the producers, 110,000 metres, 7 rigs going for most of the year. And so what has that drilling delivered? Well, it obviously delivered an additional 2.2 million ounces, and the results were incredibly pleasing. It exceeded our expectations in many ways. For example, we had some of the highest intercepts in terms of grade time metres in the history of the project, which is not an easy feat when there's 12,000 holes that have been drilled before you over 30 years of history at the project. We've been pleased with the results from the infill drilling, which has really validated the first 2.3 million ounces that we acquired, and that extensional drilling absolutely delivered what we wanted it to do in pushing those pits deeper. That 2.2 million ounces that we've added this week to the resource was delivered in just under 7 months at a discovery cost of $15 an ounce. And whilst the focus for much of this year was on that exploration and about that resource update earlier this week, we've been quietly but rapidly advancing the project in the background. Firstly, we assembled the leaders, like I said, who can match that ambition to the capability that we want. And then it's about leveraging the significant head start we've got with all the historical information. There was a feasibility study completed on this in 2012, and all that information is what we're building from. A good example of how we're leveraging the historical information and building upon it was highlighted in an announcement we put out earlier this year about metallurgical recoveries, advancing them, or increasing them, from 87% to over 95%. And so, to wrap it up, we believe we offer the best developer exposure to the Australian gold price with our significant 4.5 million ounce resource. Study results on a maiden ore reserve will be announced next year, and by the end of 2028, we've got this mine into operation. We think our value proposition and value creation for shareholders is just getting started, and I look forward to updating you again next year. Thank you.